Hey, my name is James Nicholson and welcome to my YouTube channel. A big central bank has cut interest rates. It's the 6th time they've done it. It's the European Central Bank. And in this video, I'm going to talk to you about how much they've cut, how much is theirs different to the UK cuts, the Bank of England, and also the Federal Reserve. And does this mean we're more likely to get interest rate cuts? And how will that impact your mortgage, more importantly? So if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit the bell notification. We're on the way to 39,000 subscribers now, and I want to get to 50,000 as quickly as we can. And let's get some views on this video. How do we do that, you ask? Simple. Smash like, tickle like, do something to that like button. That helps with the YouTube algorithm and helps the channel grow. So thanks to everyone that does that. So what's going on? Well, the Europeans, the ECB, European Central Bank, has just cut their base rate to 2.5%. This is the 6th cut in Europe. They're really pushing these cuts through significantly faster than the Americans and us. Now, it was interesting to listen what they said, what they spoke about during this cut. And they are saying that they have real worries about Donald Trump and what the tariffs could cause. It's very unpredictable at the moment, and it makes it very hard for people to do business. Imagine you have a European manufacturing company and you import a product from America. And right now, that would take a while to get there. If it's shipped, it could take weeks to get there. And in that time, you don't know, by the time it arrives in the port, you might have huge tariffs on that because America might put tariffs on the EU and the EU would retaliate. So this is slowing businesses down and it's making it really, really difficult. Donald Trump put tariffs on Canada and Mexico this week. And then the next day already has backed down. This is the 2nd time he's backed down on the tariffs. This time he's backed down on the automobile industry. And so he's taken it off of them. But they still have the uncertainty because it's paused for 30 days. And it makes business and supply chains really, really difficult to manage. And so the ECB is saying that even if tariffs don't happen, the EU could go into recession because people are slowing down decisions with the uncertainty in the market. So right now, their base rate sits at 2.5%. The Bank of England sits at 4.5%. The Fed is there or thereabouts as well. But we have this uncertainty on inflation. And so the ECB inflation, not the ECB, the EU inflation at the moment is 2.4% for the month of February on the yearly average, right? Now, they do think inflation is going to drop, and they think the year inflation for the EU will be 2.3%. That's lower than the UK, and that's why you're seeing lower rates. Now, will this impact the Bank of England's decision to cut rates? Because we want our rates to go down over here as well. I don't think so. I think the more important thing for the Bank of England is to be close to the Federal Reserve. The Federal Reserve at the moment are saying they can't cut rates, or they don't see a path to rate cuts at the moment because they feel inflation could come surging back in America. Already, you've got companies that, for example, aren't buying American goods in Canada. You've got all these wars that are happening over there that just isn't good for business. Stuff that is coming in from Mexico and Canada has these 25% tariffs on them. And so that is going to increase prices in America. Target, which is one of the biggest retailers in America, has said next week prices will be going up on fruit, vegetables, meat, and all these sorts of things, that it's inevitable that inflation rises in the USA. In fact, a survey of mortgage brokers said nearly 75% of them in the UK believe that the base rate in the UK will start to go back up next year based on the fact that this tariff war could cause inflation to come surging back for almost everyone around the world. Unfortunately, that's the kind of global economy that we live in. So what impact could this have on the British economy? And what impact will that have on mortgage rates? Well, right now, a lot of brokers are saying inflation will come back and that will cause interest rates to potentially go back up. I kind of disagree. I think that what's going to happen is the economy is going to slow down and the opposite will happen. We'll go into a recession. I think we're very close to being in a recession already. America's looking like they're going to have a huge contraction of 2% in the first quarter this year. And that will then put pressure, in my opinion, on the Federal Reserve and the Bank of England. Even if inflation is still high, they've got to sort out that recession. And I think that you'll see rates be cut. Another consideration that you might not know of is this week, the Republican Party, Donald Trump's party, has put a bill onto the floor where they're talking about closing the Federal Reserve. Now, if that happens, that could be carnage. I don't know or don't think that they could do that. One, I don't think they would get the votes. Two, I don't think that they would be legal to do anyway. But if they did do that, then Donald Trump would crash the interest rates because that's in his own business interest for all the businesses that he has. He believes low interest rates stimulate the economy, which they do. Lots of people lend. But it could also cause the dollar to have a crazy drop or increase in value. No one really knows how that would work. But that uncertainty is not great for the economy. And all of this combined, I think that you'll be shocked if you don't see EU, UK and America go into a recession. And if that happens, even if inflation is high, then we're in stagflation, I think you'll see some rate cuts as soon as that stuff comes out. Now, will that happen by this summer? You don't know for sure because the inflation data, the economy data to have a recession is 2 negative quarters. If we get one good quarter, that means that we could kick it all the way down to the end of the year before this stuff actually starts to happen. So do keep an eye on what's going on. I think mortgage rates will be fairly stable this summer. I think the lenders will cut rates because they need to stimulate business. Spoke to my broker today and we're looking at doing a deal at the moment and he said it is dead. Absolutely quiet. He's got a lot of deals, like we've said, that are completing because they have the rush of getting done before stamp duty and he's going to get some great commissions, but he knows he's going to go very, very quiet because he's not got applications in at the moment. So it is going to be a very, very volatile time at the moment. I hope the tariffs stop, we get some certainty, and so businesses can operate more normally. It is not great to have all this uncertainty. Let me know your thoughts, questions and opinions below. ECB, 2.5%. Bank of England, not likely to follow at the moment, but if we go into recession, you could see rates cut very quickly. Do subscribe, do hit the bell, and check out all the other content on my channel, including this video right here.